Hello, hi. My name is Jerry Miller from Trendsignal, a trader education company. This is part of my Monday Market Insight series, and today I'm just going to be looking at the week ahead. Lot going on. We've been focusing on central bank policy meetings, inflation rearing its ugly head some while back, but it's taken a while for our central bankers around the globe really to grasp the nettle. Finally, we've had interest rates, notable interest rates last week from the likes of the European Central Bank, 0.75%, and some hawkish tones coming out. In the past, we've not really had that much in the way of anything, but they're all playing catch up, not just the European Central Bank, but also the Reserve Bank of Australia, Bank of Canada. In fact, Bank of Canada and European Central Bank all raised rates by 0.75% last week. The Reserve Bank of Australia 0.5%, and actually suggested that their pace might be slowing. So whilst they're moving at different sort of rates. But anyway, it was good to see the the European or Eurozone Central Bank, the ECB, raising rates, and it certainly put the cat amongst the pigeons a little bit. The dollar is pulling back further on Monday morning as I speak. We'll have a look at that in a second. But before I do, I just want to look at some of the key data coming out this week. And of course, the reason for all this central bank movement, big changes in interest rates, significant moves in the States going from 0 to 25 basis points back in March, and we're forecasting year-end rates to be somewhere between 3.75% and 4%, possibly even higher. So it's quite a dramatic change. But first of all, let's have a look at what's coming out this week on the inflation front, and I'm just going to switch to Forex Factory to do that. Okay, so here we have the Forex Factory calendar for the week. And first one I'm going to look at obviously is the CPI or Consumer Price Index inflation number coming out from in the US on Tuesday lunchtime 1:30. We're expecting actually another decrease from last month, better than expected reading. Now, what Forex Factory is showing here is the month-on-month reading, but we actually tend to focus, or the headlines that you'll see in the press are on from a year-on-year reading. So how prices compare now compared to a year ago. The previous month, they fell from 9.1% to 8.5%. This month, we're expecting a reading of around 8.1%. And it's better. It will be better if it does come in at that rate. But I don't think it's going to be good enough to cause the Fed to change direction in any way, really. Jay Powell, in a speech last Thursday, I can't remember when, but he basically reiterated that they would pretty much do anything to get the job done. I think his comments were actually act forthrightly on inflation and keep at it until the job is done. But I mean, what else is he going to say? They're way behind the curve, most of these central banks. The US was still pouring oil on troubled waters in March this year, so they've got quite a bit of catching up, and their credibility is at stake here. So we expect interest rates to go quite a bit higher. In fact, if we look at our um, FedWatch tool, this is provided by the Chicago Mercantile Exchange that tracks the Fed funds futures rate, so we can see what the market's expecting on any given day of a meeting. And if we go to the end of the year, the last meeting of the year on the 14th of December, interest rates 3.75 at 4%. Wow. Did start the year, as I said, at 0 to 25 basis points. It's been a significant shift. And if you look down here at the bottom, you can see that a month ago, the probability of rates being at 3.75 to 4% was 18.6%. There's been a dramatic shift. And as you can see, the shift is towards higher rates over the course of the last month. So all pretty interesting, and something that obviously inflation has a direct impact on. So that's US inflation. We're expecting those numbers, unless it's significantly less than what the consensus, what the market's looking for. I really don't think the Fed are going to budge on this. In the UK, we also have our own CPI coming out. It's published as a year-on-year figure. If you remember, the previous month, it suddenly jumped up from 9.5, was it, to 10.1, or was it 9.3 to 10.1? We're expecting an unchanged figure this month. Possible that it could actually be a little bit easier as well, but it'll have a significant effect on sterling, a significant effect on the FTSE 250 especially, and also obviously on UK gilts. Our sovereign bonds here are traded in the UK, and in light of what's going on with Liz Truss's new administration. Uh, Effectively fixing energy prices at 2,500, the average energy price for a household at 2,500 per annum. The debt pile is going to increase significantly. So I think gilts and sterling could be in the spotlight for months to come. And so any higher inflation reading, higher than expectation, will obviously clobber both gilts and sterling possibly. Okay, let's just get back to the slides. So the other thing I just wanted to look at is what actually has happened in the foreign exchange markets. Monday morning, as I'm speaking to you now, quite interesting. The markets have had quite a move early on. I'm just actually going to go back to my charts and just show you. This is the chart of the euro versus the US dollar, coming back a little bit, but it seems like some of the hawkish sort of noises coming out of the European Central Bank has stirred the markets a little bit. I'm not actually at all convinced, and in fact, it looks like the markets aren't at all convinced, certainly backing away from the highs up around 102, currently trading at 101.35. And I think part of the reason is that the this is all about interest rate differentials, and having just shown you what the market's expecting at the end of the year, I don't think the European Central Bank is going to be playing much catch up. If anything, they'll be able to maintain that interest rate differential, and maybe that's one of the reasons why there's been a slight recovery in the euro. But I think this is just a pause myself in the overall sort of longer term trend of the dollar, a higher dollar basically. Um, so that's really my reading on that. Let's get back to the slideshow. So, and then the final point I'd like to make, I mean, there's other bits of data out this week, including retail sales data in the US, but really all the focus is on inflation and what central banks are doing to mitigate this and to get control of it. And that's the reason why I needed to look at that and just show you what's been happening on the Forex markets. But it also, it's worth pointing out that in the UK, we were expecting the Monetary Policy Committee, the Rate Setting Committee of the Bank of England, to meet this week and tell us that they were raising rates, which we're all expecting them to do, possibly by 0.75%. That's all been postponed in the wake of the death of Queen Elizabeth II and the funeral on the 19th. The Which is a bank holiday, by the way. The whole this meeting this week from the um, I think it was on the 15th. It's now been postponed to the 22nd, so exactly a week later. So we're going to have to wait till then. It'll be a very interesting week next week because not only have we then now got the MPC deliberating then on next Thursday, we've also got the Federal Reserve making their mind up the day before. So it could be quite a interesting couple of days for the markets. Let's hope so. Yeah. Thank you very much.